Hello again, everyone. Welcome back. In this technical analysis of the stock market video, I call it "And the Fed Said," because it all comes down to what happened with the Fed minutes that were released Wednesday afternoon at 2 o'clock Eastern Time. And in this video, we're going to focus on the NASDAQ Composite and the High Yield Bond Fund, TLT, the 10-year yield. And I'm going to look at two ETFs that were the biggest performers this week: energy and financials, and we'll talk about those. All right, so let's start off here with the ETF dashboard. And, here was the previous week, 14 sectors up out of 16, 2 down, and a lot more weakness this last week with only 4 up and 12 down. And of the 4 that were up, here we have energy 10.5% in a big move. We're going to take a look at those charts on XLE. It was literally twice the move up of the financials. And then, of course, the leaders to the downside, biotech and home builders. Now, when we look at the indices over here, everything was in the red. Leader to the downside, the NASDAQ Composite and the NASDAQ 100 were about the same at minus 4.5%. Okay, that is the picture. This is just part of the ETF dashboard. I just wanted to look at the ETF sectors real quick. And then let's take a look here at the NASDAQ Composite. Here's the weekly picture, down 709 points for the week. So pretty big move, pretty dramatic move. Actually, I think it was the biggest move since February of last year. And let's go ahead and take a look at the daily chart. Here's what we're looking at. Now, last weekend, I walked through all 4 of the major indices, and I remember when I talked about the NASDAQ Composite, I said, look, this is really, really weak, and it was at this point. Here was the Friday before that video. I said it looks really, really weak underneath the surface when you look at a lot of components, a lot of things going on, and it closed almost on slow for the week and well below the trading of the previous 4 days. Well, Monday we got a little bounce, then Tuesday we literally took all of that back and more, and then here's Wednesday when the Fed minutes came out. Now, the interesting thing about the Fed minutes, everybody knew they were going to talk about interest rate hikes possibly, and most likely they were because that had already been on the table. But then everybody's reading about the balance sheet rundown discussion. Everybody's like, oh, okay. So the Fed is still stimulating because they're not stopping the rundown or the taper. They're not stopping the taper until March. So what they're doing is they're just slowing the stimulation. And then they're finally going to stop stimulating in March. So they're literally talking about running off their huge $9 trillion balance sheet while they're still stimulating. And so we're going to have then the double whammy of balance sheet rundown and interest rate hikes. And that's what the market is trying to digest right now, and they don't like it. And like, surprise, surprise, the Fed's basically got itself in a corner. So this is what's going on here with the NASDAQ Composite. On Thursday, it broke down out of this channel. Friday, it just more convincingly traded almost the entire day below that channel line, that trend line in here. So when I look down below, and I'm expecting, this to continue to come down in a 5-wave move, that's what I'm looking for. This is a path forward. This is an estimate. If it's a normal length wave 3, I would expect it to come down here around 13,800 or so. But there's a very key support level right in here at 14,180. And here's why. I mean, you could see where we had a couple of highs right around that area, got support in here a couple of times, right around 14,180. So I'm going to have my eye on that level. But as we come down, we break that level, then watch out. But this is the picture on the NASDAQ Composite. Let's take a look at the High Yield Bond Fund. Okay, let me pull that up. Let me go to this picture right here. Here's the daily view. So here's what happened this last week. I'd had my eye on this trend line. And, sure enough, we'd had a zigzag pattern over here. We got another zigzag pattern as a part of a snapback. And then we just shattered that trend line right here on Wednesday in a breakdown. This is basically continuing to say risk off. Okay, I look at HYG and I think of this is basically a description of animal spirits and risk on, risk off mode for the market, the stock market. And right now, this thing is screaming risk off. Basically, the entire move, the trend is like this. It's going in that direction. Now, the interesting thing is I started to look at the weekly chart, then this jumped out at me that said, okay, well, here it's a little clearer right here like this. I looked at this and said, well, this looks like a bigger head and shoulders. Not only do we have a head and shoulders pattern right here, but this looks like an even bigger head and shoulders pattern with this neckline. That's why I drew this line in here. So I've got my eye on this because this could be indicating an even bigger breakdown coming, with the high yield bond fund signifying, basically risk off for the market. Okay, so let's take a look at TLT, long-term treasury bonds, and I am going to go to this scenario right here. Here's the Elliott wave picture. Let's look at the weekly view. Here's what I'm looking at. Okay, I think we're in the fifth leg down in here, and this thing isn't going to be finished until it gets below the third wave. That's down here at 133.19. And, and who knows how much further it's going to go. I'll be watching the wave structure as we come down. But as this goes down, the yield is going to be going up. This is long-term treasury bonds. Okay, so when we look at the 10-year yield right here, here's what I'm looking at. It closed at 1.77 on Friday. And that was, and actually the intraday high or inter-week high, this is a weekly view, was 1.80. And I do think that happened on Friday. Pretty sure it did. Yeah, it did. Yeah, here's the move on Friday. You can see how it came up and then it backed off a little bit. Okay, so here's the long-term trend line, long-term view of this back to 1999. And so here's how the 10-year yield looks. And so what I've got painted right in here with these dotted lines is a zone, what I call a resistance zone. Because of the trading consolidation pattern back over in here, okay? And then a little bit of a small consolidation pattern right here. So that's why I created this little zone. We've had difficulty getting through it, but now all of a sudden we're coming on really strong, and it's going to be interesting to see if we burst out to the upside of this. How far do we go? And we get above, the 2% level, then what? So right now, this is just depicting a pretty strong move to the upside, and that's it's a result of what happened with the Fed minutes and just the market confirmation of that. Okay, so let's take a look at the two ETFs I talked about. Let's start off with XLE. Okay, this is a weekly chart of XLE, the energy sector ETF. And this is all the data I've got on it back into 1999. And I've got zero up here in 2008 because that's, when oil was peaking around $150 a barrel and a whole lot of commodities were peaking at the same time. And my best take on this is that we've had a very large corrective move in here. This A, B, and then a C wave move. Now, I really struggled with the C wave move, but this is my best take on it. Here's what I think's going on. I think we had a big 5-wave move, but this last 5th wave down was a truncated 5th wave. In other words, it just a 5-wave structure to it, but it didn't quite get past, it didn't come down and get past the end of the 3rd wave in here. And that happens every once in a while, but I do believe that completed the big corrective move. And you can see I've got labeled where the 2002 low was at 1938 here on this ETF. So now we're starting off here what looks like a first wave move. Now within this first wave, I do think we're at the tail end. And so, in terms of 5-wave move, I think we may have a little bit more to go to the upside in here, but I am on reversal watch right now. I am looking for this thing to possibly turn over and then pull back down. Now, how far or how much? Well, first we got to get the wave 1 to end, And then typically you look for a 50 to 61.8% retracement on wave 2. You don't have to get that much, but we'll be watching to see, number one, when do we reverse and roll back over, and then what kind of wave structure are we getting to the downside. So that's the best take I've got on XLE, but it's also really interesting, given that I think we're close to the end of this. Here's what I came across today. Here was a tweet. This is the cover of Barron's this weekend. The commodities boom. Why prices keep rising, etc. Kind of interesting. And, Patrick, I think his name is Seresta, retweeted this by Wall Street Silver. It's on the cover, bad sign. Typically, it's the classic, magazine cover kind of thing that says, oh, okay, well, when you finally get everything on the magazine cover, well, then, maybe the momentum and everything to it has at least short-term petered out. Well, we'll see. It'll be interesting to see. And then I see that, and then I look at the analysis of where I've got on the LA wave picture, and I'm thinking, that's interesting. Short-term wise, anyway, I'm looking for a pullback. Let's see what happens. Okay, so that's XLE. Now, XLF, the financials, let me pull that up. Little different picture with XLF. XLF is a little bit more in sync with the wave count that I've got with the Dow Industrials. Let me get rid of this trend line. That's not helping in here. So here's from the March 2009 low. I think we've got 5 waves up, and we're in that 5th wave. We've been in it since the March 2020 low. And now I think, just like I talked about last week with the Dow Industrials, I think we've got an ending diagonal pattern, and this looks like an expanding ending diagonal pattern. If that's the case, we got a little more to go to get up here, because if it's expanding, wave 5 needs to be greater than wave 3, and it'll be greater than wave 3 at 42.04. Well, we closed 41.17 on Friday, so we have a little bit more to go. It can go further than that. It doesn't have to go just to 42, but this is the picture that I've got. It's going to be really interesting. We're already getting divergence here on the RSI between the peak of intermediate wave 3 and minor 3 of this last wave in here, okay? And then so far we're getting divergence between 3 and 5. We'll see if that holds. But that's the picture I've got on financials. We'll see how that continues to play out just a little bit further, and of course a little further on XLE. Okay, that's it for this weekend. If you felt like the video was helpful, give it a thumbs up. And if you're not a subscriber to the channel, hit that little subscriber button. And if you'd like more of this kind of information on a regular basis, head on over to joehenches.net. Check out the website, check out the membership. Everyone, have a great weekend. We'll talk to you on the next video.